Good morning. Happy Monday. Hope everybody had a great weekend. All right, so we got this pattern. It is everywhere. And what that pattern is this bottoming action. And so this was really tricky. I have to admit, it was a difficult period. And it was a situation that strongly suggested that prices were going to go down. I don't think anybody would be in opposition of that. I suppose after some time they would. And of course, that changed. But, we had this nasty break to the downside there. Now, when you get, 4, 5 bars straight cutting through pivots like that, it says, hey, short the rally. If it can't rally and go sideways, short the breakdown. Well, I guess if you shorted the rally, it worked partially, but it was back in your face again. And so now after, 3 retests of there, we had this major support and then this consolidation. And of course, on the new China news, back up. And now we've got this bottoming pattern, like I said, that is pretty much everywhere. In an uptrend on the weekly chart. Not everything is in an uptrend on the weekly chart. Of course, some things came down pretty hard. And then they spent the month of August testing lows as, oh, everything's okay with China and the US. Oh, no, it's not. Maybe it is. No, it's not. Or the Fed thing, tweets and what have you. So the blast off on Thursday on the news that new talks were going to happen and a break out of the range. So now we have a line in the sand that it better not get broken anytime soon. Otherwise, we're really going to see some nasty downside action, because what could cause such a thing? Some very bad news, of course. So now we've got the blast off, and Friday was a resting day. Excuse me, or an inside day, which is good. So now we've got what we call a 1, 2, and 3. I guess things are actually already 3 triggering above this high here. And that's a bad tick. It actually just a gap up, and it actually held. There was this bad tick on Thursday. So we got a gap up and we got a void below. So we got an hourly uptrend. And so it should keep going up theoretically, but you can see it's coming up to this very close to this 300 number, which we'll see how it deals with that. And not only that, across from 300 is price resistance. So whole numbers, or maybe just psychological reference points of resistance on the way up. But this one is in alignment with this resistance. So which leads us to think, and for me anyway, how much further is it going to get here once it hits that level? Well, of course, nobody knows, but looking at this wider range here, and the breakout, it should get through it. Maybe not today, we'll see, but it should get through it and make new all-time highs based on this pattern. Weekly uptrend, retest, breakout. And so the resting period fills the tank, so to speak, and it should make new all-time highs. And then from there, who knows where it goes, since there's no overhead price resistance. So let's look at other markets, which are going to be pretty much the same, just starting with the ETFs here. So the Qs here, 191.59. and 192. So up a little bit, but not above Thursday's high. That's okay. Now, if we don't need to really look at this, if we were to get a down day today or something, maybe an inside day, whatever we get here, that would be okay too. What we don't want to see is prices coming down in here and coming all the way back down, because once it gaps up and the gap up day held, we want to see it hold. So if there's any consolidation, ideally it holds above that opening price and whether it takes off today or consolidates here, which may be actually a better situation, a little consolidation, which would increase the probability of, new all-time highs. So more resting. Don't tell. Can we start? Oh, somebody's giving me little pokes here early in the week. Okay, with the fibs and the stochastics and all the hocus pocus. All right, I remember that. Okay, so let's get this back over here. And the diamond's actually a little bit stronger, poking its head above here, but similar situation. So if it was to pull back, I guess the 50 MA, would be where buyers would step up. So, we're going to see where this goes. But with this pattern, if it takes out this high, since Friday was a resting day, that's a legitimate buy setup. Now, a stop below here could be used, or you could do fewer shares with a wider stop below here, just in case we get some jiggles. That's something to be considered. Pull back to support is okay. I don't think so, Tony. I mean, anything is possible, but we don't want to see the gap getting filled. These gaps, whether it's the market or whether it's some stock that gaps up on earnings, they have a tendency to chop around for a while. And when they gap up big on earnings, sometimes they can chop around for a couple of weeks or so. But the best ones don't fill the gap. So we don't want to see it go back down to support. We want to see it create support. Right? So any kind of retest like this little dip down here is okay. That happened on Friday. Where would you put a support on SPX for 0 days to expiration? Well, this would have to be Thursday's low. Yeah, it would have to be Thursday's low. Jiggling around today. If it breaks, well, let's look at it like, if it breaks Thursday's low, there's a void below. So at that point, we don't know how much lower it'll go. You're saying, 2960-ish, too close? Well, no, I mean, this is the trading range now. All right, so you can see the hourly here. That's the trading range. To go this tight where these hourlies are just overlapping each other, I think, it's kind of like a pattern of, 1,000 razor cuts as the jiggles can get you. So, this is the 24-hour, the gray area. But once it starts to dip down and you get these, bottoming tail bars, that it's creating stronger support intraday. So as we look at the futures, we get a better indication as to the dips that have happened overnight, which we're going to take a look at. But going below here, I don't, if it gets below here, you can see there's nothing there, and what we call the price void. So whether it goes, you want to give it extra room, to some amount of points, it's kind of just picking a number. Right? So, all right. So futures, you can see they're kind of just grinding here, going up really slow, just pushing higher there. So Friday's low, our first support point. So this, whatever, so just disregard the red. So just going with, this line here in the sand thereabouts as a reference. See, this is what I'm talking about, the dip here that happened. It gives us small reference points of, hey, buyers stepped up at that level for whatever reason. I guess it got close to this low, but you got a bottoming tail bar. You got a little bottoming tail bar with the open and close is the same. You got a red bar ignored, another red bar ignored. So buyers are buying the dip as they should, expecting prices to go higher based on the consolidation and the breakout. So whether, you got 3,000, right, 300 on SPY. that's going to be an obvious place where, just psychologically, traders are going to look at that and say, hey, can it get through that level? That whole number. And we see the resistance there. So we'll see what it does when it gets there. And Qs, well, they're a little weaker here this morning than the S&P. They haven't taken out the high. We got the inside day. And so if this will hold here, we don't know. But if it breaks here, that's really not a big deal. Meaning, okay, intraday, it violates the trend. And so let's just say that's our immediate resistance and that's our immediate support intraday. But if it violates this trend here, obviously that could open up the door to further downside. But in the daily pattern really doesn't mean anything. And, when they take out this low, I'm not saying when, if it should take out this low right here, if it should take out that low and then become a bottoming tail bar, I would have much greater confidence in that pattern going long and maybe a little bit heavier on the shares, since I'd have a pretty defined line in the sand. That bottoming tail bar is low, and it's a great pattern historically when it happens to buy, looking for prices to go higher. So this is where bar by bar analysis comes in. I don't know what it's going to do today. Right now, we've just got an inside day within Friday's range, and it's early. So it's just going sideways. But overall, our bias has to be based on the consolidation and breakout that prices are going higher. And theoretically, it should make new all-time highs. But, we always look at it objectively. Yes, it should make new all-time highs, but, we've got this China thing, which is likely to raise its ugly little head again at some point with somebody's worries or comments. And we could just be, in a bigger trading range here. So depending on how this goes up, if this goes straight up here over the next couple of days, I think there's going to be a lot of sellers up here willing to take profits relatively quickly versus it chopping around here and then going up. That's just historically the kind of pattern that can get through the resistance. The faster it goes from support to resistance, the greater the probability of a stall and chopping around. It doesn't mean it can't go through it. It just means that once it gets there, we're probably going to sit through a period of chop again, and then we don't know. What's going on here, what happened in August, right? We just could be in for another range within this area up here, or maybe it's a bigger range, on the weekly time frame. We just look at the chart. We have a bias right now. It says, hey, it's going up here. It shouldn't go back down here. We'll play in between here, and the stocks that are set up now, there's a lot of things that look good, and we'll just see how it all unfolds. Really not so much about making predictions as many do. It's about just looking at what is and looking at, okay, right now it's likely to go up here, and then we'll see what happens. The same pattern here in YM, it's up, grinding on the hourly, weekly's in an uptrend, resistance is up there. We'll see how it unfolds. The Russell is the weaker. Came off of the low. It actually had this blip to the downside. And just looking at the ETF, that blip to the downside opened up the door to a nasty move, and it failed. So, we just have a bigger trading range now. I'm just get my line out here. Disregard that it's green. So we've got a trading range here with well-defined resistance point and a well-defined support point. And you can trade in between here, but above here opens up the door to a big move higher, and below here, a big move lower. Simple as that. Oil is in a messy range, but it's improving. And maybe this is going to be the time that the energy stocks finally really make a low. You can see XLE is down here near the area of that prior low. Right? It's an area. And we've got, the month of August there, that reversal pattern. Yeah, I know it's in a downtrend and resistance is up here, but maybe this is a point in time where these energy ETFs maybe could really lift off and make a move. So that's of interest. And you've got XLE, you've got XES, you got OIH, you got XOP. So you can take a look at all of those. Bonds are down. They're supposed to be based on the market strength. This was a concern with the yield curve inversion. And so now coming down to support here, we'll see if it breaks. Last week we talked about the fact that the slowing momentum was suggesting that prices could pull back, and that would have been good for the markets. All right, so strong momentum slowed. So we look at that, the distance between the highs, and then a reversal bar tells us when momentum is slowing, as well as the candles, right? Small candle bodies tell us the momentum is slowing. Then we got the down day on Thursday. It was an up day in the market. Inside day in the market. This is down, market's up. You want to keep an eye on whether that breaks down. And if it does, well, then equities should have a reason to go higher. Keep an eye on that. You can look at TLT. We don't have the futures. Set an alert, see what is going. Gold is actually up here a little bit. Right?
Yeah, TLT I said was a call spread candidate, 30-minute low.
Okay. So some of you may not know what that means. Meaning it's got two highs up here, and now it's lower. So call spread, call credit spread above this area, thereabouts. As long as it doesn't go up there in the time to expiration, you get to keep the money. Pretty simple option strategy. So we'll see if oil can hold the major support, not the same, but similar pattern as bonds were moving, strong moves, slowing momentum down here at support. So we'll see what that does. Silver, that got climactic. So now that came down kind of hard. We got the topping tail on the weekly. So gold and silver look like they're going to rest here for a bit, and that's okay. But, overall, long term, they look pretty darn great to go higher. So we covered this in prior pre-market analysis where we had this multiple year breakout. So a little rest from that, just normal. Let's see how far it retraces, breaks this support here. That would be, well, not ideal. But if it breaks down and comes down into this level, that's not going to change the trend or bias on the monthly. It's not going to change the trend and the bias on the weekly. So lower lows would break the trend on the daily at the appropriate time is buyable when you have higher time frame uptrends. So that's it. Enough for me. All yours, Dan.
All right. Good morning, folks. Let's go through the opens really fast. Since everything looks fine, I don't see any problem children. And I want to go over some things that I want to look at, like this one, the video I just posted. I like this gap, wide range breakout. Look at the weekly. Big old bottom here, the 20 and 50 curling. Price void, that looks great. All right. Weekly options traders, Amazon put spread, and it's holding great pre-market. I said this is a beautiful 1, 2, 3 to add over the highs. Dollar General, we had a beautiful put spread, the 155, 150s, and I've tightened the stop. That looks great. LRCX, we hit a bunch of these. We nailed it this day right there. The beautiful, beautiful breakout day. We sold a put spread on that, and we're also covered call. SMH, the same. We gave 3 different trades in this. A short put spread for the weekly, a longer put spread for the other swing letter, and also we're still long a third lot of the ETF. Now the swing letter, here we go. We got a lot of opens. Bear call credit spread, Akamai covered call, Amazon a bull call debit spread. So that's a option directional trade. Cara marijuana stock we bought on Friday. When we scan the whole sector, CME, we have a covered call. DGX, we actually have a bear call credit spread, the 105s. It was on this bar right here, topping tail bar, all that resistance. And we had an open profit on the gap down, and now it's what I call on probation. Gonna have to keep a tighter eye on him. So I'm gonna put him in a window. And that would be an ideal pattern to leg into a 195 call spread. I'm sorry, Condor, by doing a put spread, but there was no juice on it. Dish, we're long stock, and then we're in trail mode. I see one print up here at 37. If it is gapping up there, we're going to be selling half. You know what? Let me tell them that right now, because, you know, at the market open, I'm watching so many things. So give me 1 second. Done. EGov, long stock. We'll just sit through it. EQIX, put spread. FLT. We have a put spread, but I also have this as a directional over Friday's high. I like the gap up. I like actually the two topping tails, because then if it trades above the high, we got all-time highs, weekly, monthly. Galing, we're short stock still. ICE, long stock. We have all three of these exchanges in here. ICE, Index, CME. ILMN, we're still short 2/3 stock, and I've tightened the stop to lock in profits. Nice, beautiful relative weakness. Kellogg, we bought a 30-minute high on the gap breakout on Friday. KBH, we're long stock, looks great on the weekly. And I take that back, we have a bull call debit spread. CLAC, we're still long, we have a put spread. KTOS, long stock. A little breakout failure there, but we got our line in the sand. It's relative weakness right now. MDC, we're long stock. That still looks good. We're in trail mode. MEI, we're long stock. It looks great. I moved the stop to Friday's low, and we're in trail mode. Still has room on the weekly and monthly chart. I see spiders here, just well, doing nothing. MLM, put spread. You know what? The rest of these are fine. Let me go right to the gappers here, and then I'll come back to these after the market open. So the TLT I mentioned, gapping down. Look, it was right here when I posted it. It's fallen another 55 cents. So that's a definite call spread candidate. PAYS gapping down, a nasty gap, but no pattern. NVIDIA, I like a put spread. And I made it over just this little intraday resistance right there. That's where I got the number. BPMC gapping down in a strong market. Looks no patterns. They're on major support. Abgo, McGraw gave me this. McGraw, another put spread idea. Hey, Greg, your mic is on, just FYI. So McGraw, keep an eye on that. NXPI. I like this one better though. It's at resistance, but it's a 1, 2, 3, and it's a, you know, there's room on the weekly, monthly. So let me put that one here. ACAD, I think it's a bio of some sort. I don't know what the news is, and I don't care, but gap's too excessive. XSD, there's, yeah, Greg mentioned in the video over the weekend, just a lot of these bottoming patterns breaking out. And as you know, we nailed this SMH right there, just as a kind of a leader in the breakout. So we were in before the gap up. Here's a 1, 2, 3. CU 916. The gap's too excessive. Look at that. That's huge. The 50% gap. T is all over the place. You know, it just blows my mind how just the stupid public. You know, this guy, hedge fund tycoon Elliott, he's been accumulating this thing since who knows where. And now it's up 8 bars. And he says, oh, now I think I'll put out a press release saying I've been accumulating. In the public, ooh, okay, if he's doing it, I guess I better get in it now. Guess what, idiots. I mean, look at that. It's just the stupid public. PSX. So yeah, I like the idea of, you know, trying to get an oil bottoming stock, and I like this one. Look at it, a breakdown failure, 100% retracement. We got 2 red bars, we got a green bar, we got a bottoming tail. That can take out Friday's high. Look at this beautiful bull flag on the weekly. And it's an engulfing little bear sandwich, 1, 2, 3 on the monthly, target 110. This looks great. PXD, it's weaker, but it, you know, target, yeah, I mean, it's a swing trade, sure. Yeah, I like my PSX better, the pattern, but you know, we're just trying to get on board the whale and make money on it. Goldman Sachs I like as a put spread idea. Gap breakout, inside bar. It's a beautiful pre-market. Got nice reversal here on the weekly. FLT, we talked about. Stamp, we've been watching since last week. Still worth watching. That's why it's on my watch list. ADP. That was a breakout, but it's worth watching. We'll keep it there. On TEL, it's a beautiful 1, 2, 3. Now Baxter, nice breakout Friday. PFE, it's a slow churner, but it still has room, so I'm keeping that on my watch list. ANET's a 1, 2, 3. You know, bottoming pattern, but put spread idea. There goes my video. Look at it popping upper right. Boom. Let's wait 5 minutes. Those are our rules. Papa Delta is weak. QURE. It's also weak. This was a beautiful gapper play on last Thursday. Beautiful. PXD. Maxim. Yeah, bottoming pattern with a price void. That's worth watching. Now, Workday we have as a short watch under Friday's low. These are just some of my regulars.